Welcome back. I'm Pratap here. Today is 14th November 2024. In this video, let us evaluate the performance of high liquidity zones generated in our previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, click on the tab posts. Some of you might be seeing the tab community. Click on the tab, then you get access to our free training course. Here you have a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Each time when we release a new YouTube video or any other important update, we will be providing at our Telegram channel. Now let's get into the analysis discussion. Yesterday, end of the day report, we identified 7 high liquidity zones from daily and 75 minutes time frame. And you have a lot of learning from this stock, Cholamandalam Finance. Probably a new points you will be learning in this analysis. Please concentrate. This is a daily high liquidity zone. This is a rally candle and you have 1, 2, 3 base candles, and this is a leg out candle, and a follow through candle is a very big candle. This is what identified by our software. If you hide this candle, big candle, you really understand the nature of this candle. Rally, base, rally. So this is a big candle, but looks like a failed ERC candle. It's not a failed ERC, it is a ERC because a minimum body is required. At least a minimum 30% body or 30 to 40% body beyond that will be a explosive candle. Medium size candle you should have 75% body, leg candles. But leg out candle, if the body is less than 30%, maybe you can call that as a failed ERC candle. Maybe more than 30% can be considered as an ERC candle. But whichever the scenario, even if you consider this is a failed ERC candle, the leg out, see the body is completely coming out of the, body started inside the zone, but then after that completely it came out of the zone. That means finally prices closed outside the zone. And it's a very big candle. So our software is having the intelligence, that's why it identified this as a rally, 3 base candles and a rally. The moment you got the next candle, the size is getting reduced because of the display issues in the, when there are large candles. This is, I don't know, it is really an issue or it is the technique. Generally what software, how they develop when there are bigger candles, they try to reduce the earlier candles, the size of the earlier candles, so that all candles will fit within the chart. So that's why the technique always I use whenever there is a big candle, to really understand this candle is a base candle or a leg candle or a leg out candle. Generally I hide the bigger candles. Then I get some clarity. Okay. Anyway, this is a rally base rally. Our software worked perfectly because there are so many order flows inside this zone. Okay, have you noticed this zone? Is it a tested zone? Before today, look into the daily zone and tell whether this is the tested zone or not. Tell means tell yourself. It's not a tested, right? That means this entire daily zone is a fresh zone. Okay, now what we do? We will fine tune this zone into the next time frame, 75 minutes. This is the 75 minutes time frame. Is it a tested zone? The daily zone. Immediately you say no. The reason is, see the candle? The fine-tuned 5-minute zone. The prices went into this 5-minute zone, picked up the orders, and see the huge rejection, very big rejection. Next time, do you prefer to take a trade in this zone? The fine-tuned 5-minute zone. How we fine-tuned, I will explain. But do you prefer? Definitely we don't prefer, because the reason is the prices almost reached the distal line of this 5-minute zone. That means it might have occupied the entire order flow in this zone, right? You will agree with this point, right? So definitely we don't prefer, because next time easily the prices will be violated. But see today what happened? Exactly from this zone it reached, and again a short move, huge move. Why? What is the reason? It is a tested zone, how it worked. That's why some important observations are required. The price actions are understanding the price action is very important. Price action clues will help you where exactly the institutional order flows are available. That's why I told you, you are going to learn a very important concept now. To understand that concept, where exactly this candle? Even before I explain this point, where exactly this candle means, before I explain this, first let me complete how I fine-tuned this zone. Then I will come back to this point. This is the important point. This is the point will help you understand where exactly the real order flows lies. Okay, this is a 75 minutes time frame. So we have drawn a 75 minute zone here. We have a drop candle, 1, 2, 3, 4, 5 base candles, and then a rally candle. This is the 75 minute zone. Even you can also consider rally. This is the base candle, 1, 2, 3, 4, 5, 6, and then a rally candle. That way also you can consider. But okay, this is a medium size candle drop. So just ignore the previous one. And this you can take a reference, and 5 base candles and rally. With this 75 minutes zone we have zone. Apart from that, there is one more 75 minute zone. Here you have a drop, base candle, and then with the hidden body there is a rally candle. So we have two 75 minutes order flows within this zone. Now go to the 15 minutes time frame. In the 15 minutes time frame, you have multiple order flows in this area. This is the first 15 minute zone. We have a drop candle. You have 1, 2, 3, 4, and this is a medium size leg, also part of the base, because already all these base candles within this area, this medium size leg candle is also there. So this entire thing is the base, and then a rally candle, drop, base, rally. And there is one more 15 minute zone at the distal line of the 75 minute zone, rally, base, rally. This is overlapped at the distal line. Overlapped, how exactly it overlapped? A part is inside the 75 minute zone, another part is outside the zone. So this is also a fine-tuned zone. It's like A lower time frame zone is an horizon to the higher time frame zone. This 15-minute zone is the horizon to this entire fine-tuned 75-minute zone. That way also you can treat this. Apart from that, here also you have one 15-minute zone. This we have another 75. You have a rally, base, rally. Another 15-minute zone. Now these 15-minute zones you need to fine-tune with 5 minutes time frame. How we fine-tune? We have a rally, 2 base candles and a rally candle. Rally, base, rally, the first 5-minute zone. Another drop, base, rally. Another 5-minute zone, exactly within the 15-minute zone. So 15-minute zone is ended, started here and ended exactly within that. It didn't go outside the zone, within the zone. And again in this 15-minute zone, you have a drop candle, 2 base candles and a rally candle. Lower time frame zone as an horizon to the higher time frame zone. And also it is also a high liquidity zone. This 5-minute zone is also high liquidity zone. I already verified with our supply demand zone chain for Cholamandalam Finance. Our software also suggested this is a drop, 2 base candles and a rally candle. And of course, this high liquidity zone is also horizon for this entire 75 minutes high liquidity zone. This 5-minute zone. And fine-tuned inside. And also it is a fine-tuned zone. This 5-minute zone is also fine-tuned. How it is fine-tuned? Because it is part of the 15 minutes. Again, 15-minute zone is overlapped with 75-minute zone at the distal line. And also this entire zone is daily high liquidity zone. So that's why this 5-minute zone is also fine-tuned. What kind of fine-tuned? It is having 2 characteristics. One characteristic is it is a high liquidity zone, this 5-minute zone. Second characteristic is lesson 22 concept. This is a lower time frame zone as an horizon to this entire 75 minutes fine-tuned zone. That is higher time frame zone. Because it is a high liquidity zone, see already tested first time and second time and third time multiple times. Again here also it tested. So multiple times, around 4 or 5 times it is tested the zone. Okay, this is a next order flow, and there is one more order flow here also. We have a rally, base, rally. This is also exactly within the zone only. It didn't go outside. Only rally candle is started here. Rally, base, rally. The 5-minute zone, and this 5-minute zone is tested. Already tested, went deep inside. Because it went deep inside, next time it might be violated. But why this 5-minute zone, which is a deep inside, see here, prices went deep inside, why it is not violated? This is the question you have to ask. And another question, why we need to consider this zone? What is that important point we are going to learn? That is also important. Actually, this is part of the daily leg out candle. This entire price action is daily leg out candle. When this leg out candle started on 30th April, because this is a daily candle, this is the last candle of the day. When it happened, 15:25 candle. This is the end of the day candle. End of the day, last 5 minutes candle. And when the day is started, here the day is started. This is the morning 9:15 candle. That means all these candles are part of the leg out candle. Do you agree? All these candles, part of the leg out candle. But have you noticed prices went, by this time, leg out is formed. If you look into the dynamic view, you try to visualize what I am trying to say. Try to visualize think from the daily candle point of view. Don't look into the 5 minutes candles. Think from the daily candle point of view. At some point of time, the daily candle started here and prices were going up, going up, going up, and a leg out candle is formed by this time. Do you agree? At this level, the leg out candle formation has been already ready, but day is not completed. So by the time 1355, on that day 1355, this entire leg out candle formation is like a rally candle. It's a very big rally candle up to here. But all of a sudden, visualize now again, within the intraday candle, prices were dropping, dropping, dropping. Finally, prices reached here. At the last hour of the last 5 minutes, prices reached this candle. That means, do you agree at this last 5 minutes before closing the market? At some point of view. Of course, in 5 minutes, you will be having 5 1-minute candles. If you look into the 1 minute, you get even better clarity, but this is on 30 April. The 1 minute data is not available. It will be available only for last 4 months in TradingView. Maybe only this August, September, October, November, or maybe July, August, September, October, November. The data only available. So we can't inspect 1 minute. Definitely my assumption could be it could have happened in the last 1 minute or last 2 minutes. But within this 5 minutes candle, at one point of time, prices reached here into this 5 minute zone. At the time, this candle looks like a failed ERC candle because candle came inside the zone. The moment candle came inside the zone, it looks like a failed ERC candle, and the failed ERC body is inside the zone. It is not qualified as a leg out even for failed ERC candle because candle is closing inside the zone. The body is not coming out of the zone. If the body is not coming out of the zone, it won't be qualified as a leg out. Now what happened? Almost distal line it came. Definitely in this area, institutions might have added a huge order flow in this area. They might have added a fresh order flow in this area. Now all of a sudden, in just 5 minutes, I don't know, it could be even 3 minutes or 2 minutes or last 1 minute. All of a sudden, the sharp move, prices were moving up, moving up, moving up, and finally closed here, and then it became a leg out candle. The failed ERC candle, which is not qualified as a leg out before closing the market, all of a sudden it became a qualified leg out candle. How it is possible? So leg out formation has completed in this candle. This candle is the responsible for the creation. That means institutions might have added a huge order flow in this area. Probably this entire zone will be filled with the orders. Now you get into the daily zone. Daily time frame. See finally how the, it is here. And finally how it looks like. From this 5 minutes candle, again prices were moving up and formed this zone. And finally it closed somewhere here, 31, but after post-market trading, some more points were down. But still qualified as a leg out. And who is responsible for this entire move? The last 5 minutes, I don't know, it could be last 1 minute also, because the last 5 minutes candle, prices reached the zone and then moved up. So that means in this zone, institutions added a huge order flow. Because the last 5 minutes action, price action is the responsible for this entire movement. Because 1 minute data is not available, we are not in a position to look into that 1 minute data. Otherwise, definitely 1 minute you might be seeing some drop base rally might be seen in 1 minute data. And that zone might be having a huge institutional order flow. So that's why, see today what happened, prices didn't go inside, just entered the zone and immediately see the rejection. Why? Because in this candle, institutions added the last 5 minutes data, institutions added a huge order flow. And the next day again another high explosive legout candle. So that is the reason why, because huge order flow they added, next time prices entered into this gap area, because there is a pro gap. From the pro gap, prices moved. Still there is some more pro gap. Today what happened? It consumed all the orders in the pro gap, finally reached this 5 minute zone, and see sharply prices moved up. How sharp it is? Look into the 5 minutes candle, you get the clarity. Sharply it moved up. Then what should be our target? Your target will be somewhere here. Go to the 15 minutes time frame. This could be your target. But achieving this target during intraday is highly impossible. Achieving this much target, I am not saying it is not practical, but it is highly impossible. Why? Because to reach this target, probably we should get 25% intraday ROI. I think so far we haven't get 25% intraday ROI any time during last 1 year. That's why I am saying it is not practical. You may ask how I can say this is a 25%, why it is not 25? See, I have drawn a blue color line which is the target. How this is the target I will explain. Before that, this itself is around close to 12% ROI till this blue color line itself. And this gap, definitely it could be another 13 or 14% will be there. Maybe half, maybe another half. So definitely another 24% or 23% total from here to here. You don't have any other 15-minute zones here. No 15-minute zones. Here you have, this is the again ERC candle as a legout. So this is the reason why I have drawn a blue color line. Probably that could be. How can I say that could be the target? See here, from this blue color line, there was a lot of resistance for the prices. It is acting as a resistance line. See, the moment the prices coming, they are coming down. The moment they reach again, slightly crossed, but again coming down. Next time also, reached near to the zone, came out. Reached near to the zone, came out. Again reached the zone, came out. Reached the zone, came out. Anyway, these candles are happened today, but let me hide those candles. Already these candles gave you the clear picture. This is the area some resistance will be there, huge resistance. At blue color line, this is looking like drop, base, drop, but this is a medium size candle. Can't consider as a base candle. Probably if you go to 1 minute, definitely there could be some high liquidity zone, something like that might be available in that area. Otherwise, why they are getting so much of yeah, 1 minute also you have a drop, base is there, but legout is not great. This is a medium size legout. Even 1 minute level also it is not very clear. Maybe tick wise data if we analyze, probably we may get. But anyway, there is a base candle is there. So probably at further lower time frame, maybe 15 seconds, or we don't have access to that kind of charts. But maybe 15 seconds level, 30 seconds level, institutions might have added a huge order flow in that area. That is holding the prices. So that is the reason why I have drawn this line. because this is the area prices are getting resistance. Probably this could be the target. See, that is what happened today. Prices reached, we got the entry, prices reached this line and then came down. Again reached this line, came down. Reached, see, this line holding the prices. Maybe a little up there going up, but again pushing down. This is the area again. Prices reached and again went down. Again this is the area, sometime pushed and again came down. Finally, the real breakout happened here. End of the day, the last 1 minute candle, prices moved up. But when we got the trade at morning 9:42 candle. And when it reached, probably in this candle, they went, or maybe in this candle, maybe 10:21, it reached the target. At 9:42, 10:21 means around 35 to 40, in between 35 to 40 minutes. That means in less than 40 minutes, the trade is completed. And how much profit Cholamandalam Finance has given? It has given 18,218 rupees, which is 11.8% ROI from here to here. That's a huge profit. But where you got the entry? At the proximal, just a little inside. But earlier prices went up to the distal line, near to the distal line, prices went earlier. I am shifting to 5 minutes chart. The main reason behind trading the tested zone is observing the price actions carefully. Such kind of knowledge, this is what your experience means. Now you got a real scenario to understand. It looks like it tested the zone. Do you agree? It tested the 5 minute zone. We have a 5 minute zone, it tested the 5 minute zone and a huge rally, and moreover, next time maybe you would have preferred, but it reached almost near to the distal line. See, what is the low of this candle? Observe. The low of this candle is 1178.45 paisa. But what is the actual low of this candle? $1178.60 paisa. 1178.60 paisa. But actual zone 45. So that means another 15 paisa order flow is there in this. The remaining order flow is another 15 paisa. If it is a normal 5 minute zone, you have to do that calculation. But here what happened? The actual leg out is formation is happened in the daily candle. When such kind of order formation is happened, definitely what institutions will do, they add lot of order flow in this area. Probably they fill this entire order flow. Even above the zone also some more order flow they might have added. Probably such kind of price action you will observe only in 1 minute candles. Because this is the 5 minute candle, 1 minute candle. Unfortunately, 1 minute data we can't access in TradingView. On 30th April. It is not available. So that's why you need to understand. Definitely there could be a drop base rally will be there in this area. Drop base rally. Because prices came and then again moved. Definitely in this area there could be a drop, some base candle, again a big rally candle might be here. Or rally and follow through candle might be here. Anything could happen. Or maybe drop base, two base candles. Again a rally candle and rally candle, or it could be a single rally candle. That possibility is also there. Anything can happen. So that is the reason why you have to prefer a trade in this zone. You should not miss the trade in this zone, because this candle is part of the leg out. This is the actual leg out. To be honest, this is the actual leg out. Because I told you the dynamic view. At some point of time you have a leg out. Again entire leg out will become failed ERC candle, and then again it will become a leg out candle. And finally your daily candle looks like this. Finally you have a drop, 3 base candles and rally. This entire body is because of the last 5 minutes candle. Strictly speaking, the last 5 minutes, 1 minute candles. Because of that, this body is formed. So that's why it has become a very successful. See how sharply it moved. If you look into the 1 minute candles, in this candle prices came near to the zone, now entered and immediately started moving up, moving up, moving up, moving up, and finally reached here the target. Because it is about to reach the target, because there were a lot of resistance in this area earlier. So that's why now before moving, probably people will start booking the profit here. Because people are very clever, they draw the resistance lines. And moreover, in conventional technical analysis, there is a concept called support line and resistance line. Those people who are not demand and supply traders, probably before reaching this resistance line, they might be started booking the profits. That's why it came down, again moved up, and almost finally at this candle it reached the target. So this is the way Cholamandalam Finance has given this much profit. We got a very good ROI. See, this kind of observation is very, very much required. See, everything you can't learn in day one. Why HLQ analysis are sometimes will be helping you people, not just because of HLQ zone trades. You are learning new concepts. These concepts you can apply anywhere, not only for HLQ zones. Any zones you can apply these kind of concepts. That's why listening these videos and every day is important. People will think, okay, fine tuning the zone, we got the clarity. No need to listen the videos. You will feel like that. Because some people might be listening these videos for the last 6 months or 7 months. Finally they get bored because they feel they know how to fine tune the zones. But there are times, special scenarios you will experience. How you gain the experience? When you look into such kind of special scenarios. If you are not an experienced person, I'm 100% sure, today you might have avoided this trade because it is a tested zone. And people who are having a very good knowledge in understanding the price actions, probably what they do? They prefer the trade today. Because they know that the actual price, whatever happened previously, that was part of the leg out formation, the actual leg out formation. The last 1 minute is the responsible for that entire, this is 1 minute data. See, 1 minute data is not available. When is the last date it is available? 1 minute data? On 26th August. September, October, November. That means 3.5 months data is available in trading. That's why I said maximum 4 to 3 months, 3 to 4 months. Okay, anyway, let's look into the 1 minute data. This is the actual leg out formation. Prices went, came down, reached this zone, and again within 1 minute or maybe 2 minutes the prices would have moved up. Because from here prices moved down and again came up. Earlier it came up to here, moved up, now entered into the zone. Why the price is moved so sharp and moreover leg out formation is completed? That is because of the 1 minute candles inside this 5 minute zone. That means we have a fresh order flow is here. It looks like, if you are not experienced person, what do you think? It looks like this entire zone is completed. Order flow is completed. It consumed all the orders. Because of the push down, it consumed. But why again prices sharply moved? Very sharply. There could be 1 minute zone might be available. and which is responsible for the entire leg out formation of that particular zone. Continuation to the leg out, next day the follow through candles with gap up and prices moved that way. You got a huge leg out candle, high explosive leg candle you got. That is only follow through candle. Okay, hope you got the clarity. Next time observe the price actions clearly. If any candles part of the leg out formations, probably lower time frames like 1 minute, if there are any huge order flows, good order flows are there, you can prefer the trade next time prices are entering into that zone. Definitely you get a second trade. Who knows? It may work third time also next time. That possibility is also there. When you have such kind of huge rejections, go to the daily time frame, you will see the rejection. See the rejection. Price entered and a huge rejection. Go to 75 minutes time frame, you get even better clarity. So it's a huge rejection. The first 75 minutes candle, remaining 475 minutes candle, price action is within that area only. Not much movement. Okay, this is about Cholamandalam Finance. And there is one more zone is violated, but we don't prefer the trade because it is a tested zone. See, previously also tested zone. In this chart also tested zone, but here we are not preferring. Why? Let me explain. Here you have a drop, 2 base candles drop. This is the 75 minutes high liquidity zone, and this is having an excellent fine-tuned zone, 5-minute zone. Okay, before that 15 minutes time frame, you have a drop candle, you have 2 15 minutes base candles, and then again a drop candle. That's why I have drawn the 15-minute zone here. Drop, base, drop. Okay, within this 15 minutes, again we have a 5 minutes fine-tuned 5-minute zone. See here, you have a drop, 2 base candles, and again a drop candle. You may ask a question, why I didn't draw zone like this? Actually, this is the 5-minute zone, right? Yes. Actually, what I did, I adjusted up to this inside the 15-minute zone. The entry, I adjusted. See, now the entry is exactly at the distal line of the 15-minute zone. One thing is, this is the risk management and also fine-tuning the zone in such a way the entire order flow will limit to this 15 minutes area. Because here the major actions will take place, the remaining area easily prices move up. See, that is what happened. Prices already moved. Second time also it moved. And today it is easily violated. In the morning 9:15 candle itself it is violated. It is a tested zone, not a high liquidity zone. It is just a tested zone. And go to the 1 minute time frame. See, today morning 1:15, see, sharply it opened somewhere here, I don't know. This is such a huge, big candle is because of some freak orders, freak trades. So that means some false orders might have been executed. That's why it is showing open here. See, low also the same, open and low. And that too very, very far away from the previous close. And sharply moved up. And the entire zone is violated. Many times you see such kind of very large candles, 1 minute candles at 9:15 because of some freak trades. Okay, 1 minute itself it is violated, 1 minute candle itself. And moreover it is a tested zone, today violated. So this is about Deepak nitrate. And other than that, we have few trades we did not take. First, let me go to the daily time frame. The one we didn't consider is, yesterday also in the Telegram group, I put a message by saying ignore RT Industries. RT Industries, there was a what to say, demerger happened. Demerger means company is divided, Aarti Industries company is divided into two companies. Aarti Industries, and they separated Aarti Pharma, something like that. I don't know. I think it is Aarti Pharma. It is split into. Or Aarti Drug, something. The demerger happened in 2022. The date I didn't remember, but I put the detail in the Telegram group yesterday. So before that day, the demerger day, I mentioned the demerger day. Before that day, the data has to be adjusted, historic data. When from 1990, 1994 or 96, somewhere Aarti Industries might have been listed. From that day till that demerger day, the whole historic data has to be adjusted. And TradingView, the problem is demergers, the price adjustment was not proper earlier. I think recently, last 1 year or 1.5 years, NSE set some rules for the demerger. Those rules are very clear. But earlier, the demerger rules finding that how much price has to be adjusted, historic price, was not very clear. So what Aarti Industries, probably they might have adjusted with some wrong formula or whatever it is. They used, you may ask a question, then how I adjusted in my data? I adjusted by taking the reference from BSE India. BSE India, the adjustment prices were shown in some of the charts in BSE. So what I did cleverly, I looked into that adjustment, whatever the prices, I calculated that value, how much they applied for the adjustment, and I derived the adjustment value, because BSE or NSE, the rules are same. That's why I applied the data on NSE. That way I got the actual adjustment values from BSE website. BSE, they were, I don't know still they are showing or not, but at least for the last 1 year or before, BSE was showing their adjustment data in their charts. Not every chart, there is one special chart is there in the BSE. In those charts, they were showing the adjusted values. So from there I derived. That way I found, because I spent nearly 3 months time to collect the historic adjusted data for the demergers. Manually I collected. I spent a lot of time for doing this price adjustment. So in that process I observed there is a difference in their TradingView formulas. Even once I raised a ticket also. Raising a ticket means raising a complaint in TradingView about the demerger. At the time they didn't give me a clear answer. TradingView people. They told some value, then I sent those references from BSE website, and they argued with me, BSE website is different, NSE is different. Whether BSE, NSE is different, but the adjustment formulas are same. They can't be altered. Because this entire BSE and NSE, whatever the formulas, everything is defined by our our financial bodies. But anyway, after that, multiple communication happened between me and the TradingView support people. They didn't understand what I am trying to. It's not they didn't understand. They didn't show interest to understand what I am trying to explain to them. And after that, I left. So exactly. But last 1.5 year demergers, what is happening? Now there is a common, a proper changes took place in the stock exchanges. They have defined certain rules, and based on that they are changing the demerger related historic data. But before that, this happened somewhere in 2022. So that is the reason why some difference we observed. Nearly 40 rupees difference or something is there from our value and TradingView's value. So that is the reason why I told you people just ignore this Aarti Industries. because my zones are different and their current value is far away from the zone. See, this is the zone. According to my software, if they would have adjusted, the price would have been very near to this to yesterday's closing price. But see, huge difference is there. That much difference won't be there. Okay. This is the reason why we left RT Industries. Next one is Bandhan Bank. This is a daily high liquidity demand zone. This also we should ignore. The reason is this zone was created on 24th is the leg-in, 24th March 2020. 24th March 2020, I fine-tuned only 75 minutes inside. I didn't fine-tune 15 minutes or 5 minutes. 2020, the 15 minutes data is not visible. 15 minutes data in TradingView is available only last 3 years. 2020 means almost 4 years. That's why 15 minutes data is not there. And 1 year, only last 5 minutes data is only last 1 year is available. 5 minutes data. So beyond one year zones, we can't fine tune up to 5 minutes in TradingView. Maybe if you are using some other software and if they are providing you the 5 minutes data for beyond 1 year, probably you get an opportunity to work on the zones. Because I am using TradingView, no other option for me to fine tune these zones. So that's why didn't plan any trades in Bandhan Bank. Anyway, price also did not enter into the zone today. Next one is Cholamandalam Finance. This we already discussed. We got a very good trade from this. Huge ROI we got. And next one is M&M Finance. Mahindra and Mahindra Finance. This is also, I think, same problem. No. This is a valid zone. This is 6th May 24. We have a drop. You have 1, 2, 3, 4 base candles and a rally candle. This is the zone identified by our software. This zone is having a 75 minutes fine-tuned zone. Here you have a rally is available. But within the 75, there is no fine-tuned 15-minute zone. 15-minute structure is not at all good inside the zone. These price structures are not good. You have maybe base candle 1, 2, 3, 4, 5, 6, 7, 8. After that you have a leg out candle. So that is the reason why I didn't fine tune this zone. Prices will be violated easily. There was some price action here. Actually, you can also draw a 75-minute zone in that area. Let me show you. This is the last tested. This was the first time the zone was tested here. You can draw a zone, a part of the zone outside. You can consider this as a failed ERC. That way you can draw a zone like this. This is the 75-minute zone. This is the 75-minute zone. And go to the 15 minutes time frame. The 15-minute structure is not good inside this zone. But still, you may consider this as a ERC base or part of the base, and the leg out you can consider. But I'm feeling they're all looking like medium-sized candles. Or maybe let me hide. If I hide all the candles, probably. Okay, at least these two are part of the base and rally candle. This is the way you can draw the zone. 15-minute zone. Still you can consider if it is a drop candle. This is a drop because prices were going up and again dropping and closed. If in the drop candle lower wick of the leg in also you consider the lower. So that way 15-minute zone you can draw. A part of the zone outside is there, another part is there inside. And within this area, if there is any 5 minutes, you can plan your trades. But unfortunately, I didn't find a proper 5-minute zone in that area. That's why I completely ignored. But I'm just showing you why I didn't draw and why I ignored that. Here there is no proper 5-minute structures. You have a drop, you have base candles, there is no leg out candles here. And today price entered into the zone. But where to plan the trade when the structures are not clear? See, price has entered. See, this is the actual zone. This is the line. This entire thing is outside the zone. Just entered and again then moved. Now let me delete all these outside zones, you will get clarity. See, today price entered into the zone. But there is no order flow, but it moved up. There could be other reasons. Maybe some 1 minute strong orders might be available in that area. But anyway, we can't plan like that unless there are proper price action clues. We can plan aggressive trades. Otherwise, you can't plan just like that. Came and moved up. But there is no proper fine tune. That's why I just ignored that area. But the second one also we didn't have proper. Probably next time the stock will be violated. So that's why it's not no way, trade from M&M. Next one is RBL Bank. This is also a daily high liquidity zone. This is from May 23. So we don't have 5 minutes data. This is a rally base rally. This is what our software suggested. Rally base rally. And I fine tuned up to 15 minutes, I guess. But 5 minutes data is not there. So here also you can't plan a trade. And even today also price did not enter into the zone. And the next one is Vedanta. Vedanta is also a daily high liquidity zone and we have some order flows. So let me explain how I fine tuned the zone. Go to the 75 minutes time frame. Forget about this order flow that I will explain later. Look for the 75 minutes zone. Here you have a drop base rally candle. You have a big wick. Sufficient body is there. Prices moved out of the zone. So drop base rally, the 75 minute zone. So from here to here, from here to here is the 75 minutes. Drop base rally. Because this is a drop lower wick of the leg candle also you will consider in drop base rally. Okay, in that we have again fine tuned 5 minute zone. This is the one. See, you have a failed ERC candle as a leg-in. This is like a rally candle. And then you have 1, 2, 3, 4, 5, 6 base candles and a rally candle. This is the 15 minutes area. And in this 15 minutes area, you have a fine-tuned 5 minute zone. Rally base rally. Prices moved up, came down, came very near to the zone and again moved up. That means in this area strong order flow is there. First of all, this is a fine-tuned 5 minute zone and the another price action indicates definitely we can plan a trade in this zone next time prices are entering. But in the later again prices came. Once again they came near to the zone and again moved up. During this process, rally base rally with hidden body. Maybe you can plan an aggressive trade setup here based on the price action clue pro gap. If the risk is within your limit, there is nothing harm in trying. Because aggressive trades are quite dangerous trades, always remember. If you don't properly plan aggressive trades, many times you see zone violations. That's why carefully you have to plan aggressive trades. Because I am having a gut feeling, definitely this zone will work. And the gap is also not filled. Maybe we may get an opportunity. But anyway, today price did not enter into this zone. We didn't get any trade opportunities. And Deepak Nitrate, already we discussed the zone which was violated, a tested zone. That fine-tuned 5-minute zone is a test, already tested. 2 times it is tested. But today it is violated. So this is about the high liquidity zones we identified from our yesterday's list. Hope this information will be useful to you, especially the concepts you learned from Cholamandalam Finance stock is very, very important. Because such kind of observation you should make when you are planning your trades. See, there are certain small things, small things that will help you earn a very good money. Okay, this is about today's session. Let's all meet again in our next video. Thank you.